it's not just about stocks. It's about the curve steepening. It's about Druckenmiller talking about breadth broadening and a lot more.
Yeah, this is one of those rallies that not only has taken people by surprise, but continues to roll. And we're seeing major gap ups. I was mentioning on Squawk, we're seeing major gap ups in the morning. Highly unusual, more of the 1980s action. And it's very interesting because Stan Druckenmiller talked about Marty's why and his views of the 1980s, and they're pertinent as ever. We've got some incredible breadth. We have a Fed that is completely on the side of the bulls. We have a president who wants new highs. We have stocks that are recovering well ahead of the fundamentals, but some people could say that's what should happen. Look at the airlines. We had some numbers from Phil LeBeau off a very low basis talking about flying. And it's almost as if people decided COVID's over. It's a V-shaped rally, and you better get on board.
And that makes you a little uncomfortable.
Well, I just think that the Friday rally is, as sweet as it was off the employment number, has not brought out any sellers, Carl. And I often think that there have to be sellers at a certain level. I mean, can you really take the banks up so much when there was so much selling of Citi 20 points ago, and now no selling? I mean, where are the sellers, Carl? And I don't see them. They're not attracted by American Express on a downgrade this morning. They're not attracted to Bank of America, even though we haven't seen numbers lately. They're not attracted to Wells Fargo, even though at 22 they were very well attracted. It's as if whatever happened has vanished, kind of like we set the world back to February. And David, I think you know when you look at, say, a Simon Properties, because you look at deals all the time. I mean, Simon Properties is up 40 points. Why? Right. Because the people were wrong who sold it in the 50s? I mean, it just seems like either people were very wrong selling, including Warren Buffett with the airlines, or it's fanciful. And we're just dealing with a market pumped by the Fed and a market where people just say, I have no choice. I've got to come in. I missed the early part. Stan Druckenmiller didn't like the market. He was wrong. We've had other people, obviously, who were wrong, and maybe they changed directions. Ray Dalio wrong. The wrong, smart hedge fund trade has decimated people.
No, it has. And Jim, listen, what you just said is what you hear, I'm sure, and I hear over and over again, which is people who are perhaps less positive throwing their hands up and simply saying, well, maybe it's just all about the Fed.
Yeah.
Maybe it is as simple as that we have, we have ZIRP. You just can't fight it. Nope. And until that condition changes, I can't expect perhaps that much of a different market response. That said, to your point, when we look at the moves, for example, Assignment Properties, which one has to imagine has a troubled business for many months and years to come. Not saying it's, completely hobbled, but it's certainly not going to be what it was.
Right.
And or so many others. I guess, Jim, I come back and say, okay, as I'm sure you have these conversations with asset managers, what's going to make the difference? When are things going to return to some sort of sense of, well, this is really what the business is looking like, as opposed to this V shape?
I think it has to be earnings. We're in a period where there is a dearth of information. And that dearth of information is being viewed positively, I believe, because the Fed has allowed anybody, with the exception of Hertz, to raise money. And judging by the common stock of Hertz, people even think that common stock could be worth something in some sort of reorg. Yeah. You know that's too bullish, David.
Most likely. I mean, recovery value in bankruptcies is rare, but it does happen.
It does happen.
I heard the same Diamond Offshore, right? That was another one. And people talking now about oil and that huge rebound that's taken place there, guys. And will there be a recovery value in that equity? So you're starting to hear that. But to your point, Jim, it's unlikely typically, but perhaps reflective of this current period, that we would see significant moves up in the equity of two bankrupt companies.
Yeah, I mean, Carl, one of the things that if you replay the tape and you listen to the strategists, most of the strategists were trying to figure out whether you're going to have an L-shaped recovery or whether it was going to be a swoosh. The V-shaped recovery was limited to one person. It was President Trump. And I think a lot of people just said it's election year, so he goes with a V. You seem to be very positive from many of the strategists. Well, I mean, now it doesn't even look like a V. It just looks like a check mark. And I think that a lot of us who've been living with masks, been living with gloves, are saying, well, wait a second, social distancing, what is that about? Why do we need these? And the answer is that because maybe this is why. Maybe this is why things are okay. Maybe this is why people are flying again, because they feel a little bit safer with a mask. But and we didn't see the big explosion of COVID cases, but there are many more COVID cases out west. It's just New York, which is the epicenter, which feels much safer. And the safety trade is really at work here. People feel safe to buy stocks.
Yep.
Do they feel safe to shop?
Yep.
I've got 2 big Amazon reports on my desk which says no. They feel safe to shop, buy their PC, and buy their cell phone, which is so easy. My wife was ordering, what is this woo-la-la? I mean, she's like, boom, 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 boom. I said, what did you order? I said, well, I ordered this morning stuff. I mean, I don't know. I mean, it's order away.